Hi there, guys. It's Dan here with your market update. Just wanted to do a bit of a session here, a bit of a deep dive on stocks, really, because it's sort of all eyes on. We are at such key areas here in the stock market. And let's start with, one of the sort of granddaddy of them all, the Dow Jones, and just a continuation from last week. We still have this huge kind of four-wave divergence now, this huge loss of momentum on the weekly, and we're still red on the pro trading system. We have a trend predictor here setting up, which will close this week, telling us that actually there's going to be a down week at minimum, and I would argue that we could get an even bigger move. And the reason for that, if we sort of dig into this on the weekly, is we just grab a fib here, and I'm going to move to the daily in a second. But from the high where we had the sell-off, we've been losing momentum, pushing down, and now we find we can measure a fib here. And as the market is rallying, it's been rallying this week and for the last couple of weeks through the moving averages here, actually finding we're getting into this fib zone. And we had a bit of a stall, when was it, last week, and we came off towards the end of last week, and we found support and we kept on pushing up. And if we look at that on the daily, we could probably see that a little more a bit more in depth and detail. So, we came off, we bounced here, and we got to this sort of 61.8 sort of zone, and we rolled over a little bit, but not far. We just found support. We turned green on the PTS. Now, what we've got shaping here is as a potential is what we would call an ABC. And when we have an ABC, and really in daily terms, we tried to print a new low here. We didn't quite close lower, but we did have an extension in the pricing on the wicks. And so, pretty much we're classing this as an A wave, and then we have a B wave up. And it's around this zone up to this 76.4, 61.8 on the fib levels that we are, probably going to see, the price reject at this sort of level. And we've got it at a big round number as well here, 36,000. So, very simple from a trading point of view or trading college setup. Essentially, we're just waiting for the next red PTS, and it could come in the next day, 2 days or so, around this area. Don't know if it's going to happen, but that's what we're looking for in the Dow Jones. And if we sort of dive a little deeper on an intraday time frame, we can actually kind of plot a bit of a 5-wave count, some sort of 1, 2 down here. Sorry, there's a lot of trend lines here. 4, and now we're 5, we're into this extension. And again, if we sort of just grab a fib here, you can see I've been doing lots of trend lines. We're getting into our usual sort of extension areas where the market will just get a bit tired, and we're going to have a reversal again back into that 36,000 zone. So really keeping it simple, looking for a red PTS to close and confirm in the next few days. If we do, that's our sell signal. If you miss it, no problem. Wait for it to close and confirm that day, and we just do 1 pip below that red candle for an entry, bit like we had here. We turned red, and this time and actually rallied a bit, and we didn't get the sell till here. So if you'd put an order 1 pip below the low here, you would have been safe through this rally, and then you would have got filled, and obviously we had fabulous risk reward. It's a real key area here. And in terms of where this could go, back to that weekly, we know that 2 waves are serious pullback, 3 waves are trend ending, potentially trend ending setups, 4 waves certainly. And we could see a real deep correction back to the previous high here, pandemic high, down to sort of 30,000 zone. That's what we're looking for. That is what we're looking for. That's the game that is afoot. But like all kind of chasing big moves, we need to wait for the confirmation. The system is still telling us red on the board, still telling us to look for shorts, look for the next short play. And that's the sort of Dow Jones. If we look at then the tech market, tech is ahead of the game. It has sold off heavier. We're already, if we look here on the weekly, we're already 3 histograms in. And, we could see some more downside here. We're having a rally, a little bit in these kind of crocodile jaws of the moving averages. So we need to break out of this. A really simple entry, certainly from a swing trade perspective. Again, just 1 pip below the low of this red candle. And so if it pushes up and turns green, you're safe. If we print another red candle, tomorrow, again, just 1 pip below the low of that red candle, with a stop at the high, and see if you can get 2 to 1 risk reward. But really, we're talking again back to this sort of 12,000 zone potentially with the NASDAQ, and quite crucially here, if we look at the monthly, it's very separated, so mature, so separated on our moving averages, very mature on our storyteller. We're turning red here. We're just at the start. Do we finally get a red monthly PTS like we have in the past and have a serious correction? This was 2008, 2009, the housing crisis, and we can kind of go further back to the dot-com bust. And we did this. And that's the sort of area you see here, this very extended storyteller back in 2000, where things are just overcooked. And it took a number of months for it to really roll over. We could be there. I mean, the separation is just so much more extreme here, where we are in modern times, 20 years later. But yeah, expecting a bit of a, more of a sell-off. We're just at the beginning here in the NASDAQ. And so again, we just wait for the signals. And this one, again, you could maybe go to the weekly as a longer term move, 1 pip below the low there on the weekly as a potential entry, or keep it simple, look at the daily. The daily has turned green today. So we just need to wait for the next red PTS. I mean, if you're in when this turned red on Monday, and really the stop is above here, so it's still in this trade until it rallies and makes a new high here. If this fails and turns red, we're back in again, or new entries here to the short side, because the risk reward is fantastic. Back up at 15,000 here, maybe we look at some sort of free money, this bounce from moving average here, 15,000 sort of zone. And then that's where we get some really good risk reward. It could just be a few hundred pips risk for a 3,000 pip reward across a period of time. So that's the NASDAQ. Let's just have a look at the S&P. Let's see if I can find it here. The S&P, obviously, again, the granddaddy, very similar to the Dow. If my Pro Real Time can load here. So very similar to the Dow. We've had this big push down on the daily chart here, and we're just rallying. We failed at 61.8. We're coming for a bit of a kind of double top sort of zone here. Anywhere in this zone we could get the rollover. Just waiting for that daily red PTS. We had this quite big trend line underneath price. Maybe we just rally to this trend line, test that trend line again, touch that trend line around 46. Zone 46.5, and that's where we turn red and roll. So waiting for a red PTS in the S&P. So if we just move to Europe, then we're looking at the the DAX, Wall Street. Just looking at the DAX here. The DAX again is in advance of the of the Dow. We do have, if we look at here on the daily chart, we have this sort of real band of support which price has rallied from so many times, and we had these V pivots. V pivot, is this the time where the V pivot just fails? Absolutely fails. Again, real good strategy is, we've still printed red here. As we've rallying, we're still printing red. So 1 pip below the low of the day there with a stop at the high, and just see if you can get filled the next day and go for that bigger target. If we look at it on the weekly, now the weekly has just begun. We've had our first momentum trigger on the weekly with a PTS combination. Second PTS here. So this rally, we're just a bit in croc jaws. We need to get out of this. Again, if we can just 1 pip below the low of the week, we could have that bigger move back to the sort of pandemic highs here, down to sort of 14,000 zone. So, plenty of risk reward, good risk reward there. If we look then at the FTSE, FTSE, there we go. FTSE's holding up, better than the other markets. There's been a move as inflation and rates are starting to go up. There's a move from what they call risk appetite, riskier stocks, growth markets, into cyclicals and your value stocks, and a lot of those are sat on the FTSE. So we can see here the FTSE, and while we have got a loss of momentum on the weekly here, we're green, very different landscape here on the FTSE. So for me, if we do, if stocks really do continue up and we don't get the sell-off, and the FTSE could be a great market to trade to the long side, because it's just strong, it's just holding up, it's daily green. We've got longs here. Where I would be a little bit cautious here is, if we just measure a fib here, if we push up to 70, 77, 78 zone, that's where we will probably have a bit of a divergence on our storyteller, and we may just pause this up move. So if the Dow, the DAX, the NASDAQ, the S&P come off, undoubtedly the FTSE will as well. So keep an eye on that. But certainly a very different landscape. It's still green daily, still green weekly. And we don't have that sort of steepness in the storyteller here on the weekly, although we do have still losing momentum. So there are still kind of those Fibonacci extension areas. Here, if I was long, I'd be locking in some profits now, because we do have a bit of a divergence still from these lows, up to where we are now, a little bit extended, a bit overcooked. So we could see a pullback, which is in line with the other markets, really. So there's your focus, bit of focus on the stock markets. Really are occupying most of what I am doing at the moment. Really focusing on stocks to make my money. Just a quick one then on commodities, on crude, another market I'm very interested in. We've been in such a lovely bullish up move here, and we've just come to this sort of 91 zone, and we're just coming off. And if you can see where I've measured the fib level there, just from the swing, we got to an extended area. We had a little bit, the weekly here is looking long and strong and great, but the daily, we had just a little bit of loss of momentum on the storyteller here. So I was just measuring from this high to this high, taking a bit of a fib here, and we're just into these extension zones. Obviously on the bigger rotation here, of course, we have another fib, and that's where we've stalled. And so just expecting this to perhaps come down to 87, if it keeps going, maybe even down to sort of the 84 zone, If we just keep it really simple here. And so, you know, if you participate in those kind of divergence trades, fine, but we're just back into support here. So if we get a new solid green PTS on the daily, you know, still a buy signal, but I would be a little cautious of you know, seeing this market beyond $100. I think $100 is a big psychological round number. If we just run a fib on the swing here, you know, we've got one of our big fibs, 161.8, right around that $100, and that's really our target for long side. We're still long, you know. We had a lovely three wave, it brought the market down, we found support, and now we're into a new kind of 5 waves up, and I think we might just have a bit of a fourth wave correction here, just brings it back into this support zone, and then we get a new green buy back up to $100. Really liking that from crude oil perspective. The other market that's looking really quite nice is the euro dollar. You know, it's been such a healthy downwards move, and we started on the daily to just see, you know, a loss of momentum down, and we had this, you can see this sort of 2 wave here that you can see, and we've had a lovely reaction off a support area, off this 127 kind of support, this extension support here. I'll just get rid of these arrows. And you know, we're expecting more of a continuation to the long side. So you know, like that for longs, the daily has turned green. Keep it simple. All the while it's green. Happy days. If it fails and starts to pause, you know, it's pausing at this kind of this double top area, this previous high. You know, we could see this here just pop back. In fact, let me just draw that again. Sorry. And next targets really are up to the moving average, up to 115 area, 11500 area. If it fails and you know, we see a bit of a deeper pullback, then I would still be very interested in these areas to sort of buy again. And if it turns red and comes back down, and mainly because we're looking again, you know, very similar to sort of stocks, but in reverse. We're looking at a bit of an ABC. So, you know, the initial A up here, and then we have this B, and then, you know, we maybe get the true move C. So very simple. If it does turn red, we just wait for the next green buy, you know, around this sort of zone. Again, bit of a head and shoulders for any of you guys that know what that is, you know, but keeping it really, really simple. You know, at the moment it's green, it's long, looking for 11,500. If we do get a little bit of a pullback, then, you know, maybe we've got a shoulder here, a head here, and then we get another shoulder there, and that's where we turn green and go long again. So we're green, we're long, PTS is a buy, in between moving averages. So interested in that for a bigger move up in the coming days. So that's it really. Those are the asset classes that I'm interested in. Watch out for those stocks. I think we're in for a big move. So wait for PTS to turn red again on that daily for entries. Cheers guys, have a good rest of your week, and happy trading.